Okay, good morning, guys. I have been quiet for a week. I apologize for that. Unfortunately, I was hoping to try and get a forecast video out last week. However, I had a death in the family and was unable to attend to trading at all this past week. So, effectively, instead of starting trading on the 10th of Jan, I have now obviously had to delay another week. We're back in it from this week, so I thought I'd get a forecasting video up for the week ahead live with yourselves. I haven't looked at the charts all week, so we'll just kind of go through it fresh, see exactly where we were first week of Jan, what's transpired over the past week, and where we see ourselves going forward for the week ahead. We'll try and keep it as short as I can. Maybe a bit rusty. Haven't looked at the charts all week, as I said, so we may be surprised by a few things that we see. So, as per standard protocol, we'll go top-down analysis. As I've said before, you always want to start with the higher time frames. Obviously, the monthly isn't really going to show us much because we're in a range at the moment. You can see that the market is obviously on a bearish momentum at the moment, but it is retracing slightly. Doesn't look great in terms of how it's printing. So we've got inducement candles being formed on the way down for bearish movement. However, it is being stopped and staggered as it comes down. So effectively, you could term it as some form of a compression move. It's a complex pullback of sorts. There's no clear direction as to which bias the chart is pulling towards aggressively. You can get a good impression of this using the line chart tool, where you can see how the market moves. So you can see obviously larger moves, and then compression moves as the market moves up are more clearly defined with the line graph. When you go into the chart itself, so we're kind of sitting where we kind of anticipated a few weeks ago in terms of a small pullback. So when we go down to the weekly, we can see that the projection that we had from the beginning of the week, of the year, we're kind of in a bullish momentum run. We're coming up into these target zones. We seem to have kind of blown through this area of supply that we were targeting as an area of interest. This area has also been taken, and the higher area that we marked up seems to have now been entered. So let's remove our projection lines off the charts so we can see things a bit more clearly. So here we see the market has rise bullish from the beginning of the year into our areas of interest where we were watching for some sort of reaction. We can see some form of rejection here on the week that's gone past. When we go down into the lower time frame, we can see the market entered into the supply zone, has rejected off it. So clearly there's some form of support resistance being created here with a supply candle. And we see that as a result of the tail off at the end of the week. Now, normally what does happen, as I said, is you'll see throughout the week where Monday kind of develops. We've got Monday at this point here. You'll see a dip in the market. It'll go for a low, optimum trade entry for the bias of the market. So here, the low point would be here. And we can see that for the remaining 3 days, the market did then obviously trend bullish. It's a 200 pip move. And then on Friday, we've got a dip down, which is the retracement, which is characteristic of GU. You'll kind of see a movement where, if I can get this right, you'll see that throughout the week, you'll have a dip down. It'll rise up for Tuesday, Wednesday, Thursday, and then it'll pull back the opposite way at the end of the week, normally. Obviously, if it's going bearish, then you'll be looking for a pull-up, optimum trade entry with trend on the way down, and then pull back on a Friday. So effectively, that's kind of like a characteristic that we see of GU as it develops throughout the week. So it's something to bear in mind. On the daily, we can see that we are now obviously within an area of consolidation. There's a whole heap of orders lying up here where people have sold out from. We can see liquidation of certain stops and filling of imbalance at this area here. We're now targeting this supply candle to see exactly how it kind of reacts. On the lower time frame, we can also see what happens there, but you can see it's kind of entered the zone, rejected out of it. We're probably looking for a reaction from this area now. So we want to see how the market reacts into this area, possibly targeting the 50%. But then bear in mind, we also have equal highs or sows above. So there is a danger lying above here in terms of a liquidity grab. So we could basically see something like this happen, where we kind of have a pull up. And then obviously the market goes bearish for some term. But it could also flip the other way and continue to the upside with that liquidity grab, taking buyers and sellers out on both sides. So again, we'll go back and just put another projection on. So we've got this as well, which could possibly happen. You come up you'll come into the zone, you'll liquidate out of the zone, take out the buyers, possibly take out the sellers, and then you continue to the upside. Again, we don't predict the market, we go with it as it shows us what it wants to do. So these are just projections. We want to see how the market kind of develops within these areas of interest. Yeah, so I mean, even we can see here areas that I had marked up first week of Jan. Even though I haven't actively been trading, there was a few trades that I did take. We can see very beautifully our areas of interest were obviously targeted and tapped, and then the market moves out from those zones. So beautiful trade here where we kind of came into our demand and the market moved 200 odd pips, 250 odd pips in the direction of our bias. Very good trade, beautiful, safe trade into the inefficient wick, leaving the demand area behind because it's already been liquidated with this move to the upside. As we can see, demand, institutional candle, pull to the upside, aggressive move out of the zone, and then breaking intermediate structure to the upside here, and then going for highs and imbalances that we can see being filled with a compressive move to the upside. So again, here you can see very clearly the big move, the institutional move starts down here. You've got aggressive moves out, and then it compresses all the way up to here. And now, obviously, then the big push up into the zone of interest, which is the supply that we're looking at now. And we're looking for, obviously, a reaction through here as well now. Okay, so we'll get rid of these zones because they seem to have been mitigated. In terms of demand, we'll get rid of this. It's a lower time frame demand. We're not interested in that for now. So effectively, when we go to the 8 hour, we can see consolidation into the imbalance on this candle, rejection from the area, and then good sells towards the end of the week, which showed us very clear the market being held up at this point, respecting the high being formed, and then rejecting away from it. So a nice sell at the end of the week as well. Again, what we're looking for is a possible pullback into a demand that's been induced down here. That may well be a reason for the market to then obviously boost itself back up again. So we may well see a drop down into this demand because it did create a nice push throughout the week from this point. Come back in here, test this area, a lot of volume down here, probably a good bunch of buyers sitting here as well with their stop losses below this level. Could act as an area of liquidity pooling, grab a liquidity, and then use that momentum to then push up to the upside. Everything else before that seems quite compressive. You've got strong moves in here, which are obviously a nice area to target for future sells long term, but obviously it needs to come out of the correct zone and the correct time frame. So these again are areas of interest that we could leave and mark on, even as intermediary stops for sells that we're looking to hold long term as swings down to these areas of interest. Again, there are zones below us as well that obviously we have marked up that have not been mitigated. So at the moment, it's just a case of understanding exactly what the market is doing and going with those indicators that we see in terms of printing of candles, rejection wicks, areas of supply and demand, areas of equal highs and lows. We'll go down to the 4 hour just to see exactly what we can see. Again, very similar to the 8 hour. There's no real need to go down below this because you're going to see the same story when the market's telling you something on the higher time frame. There's no need to then go down and decipher it on the lower time frame. You just wait for that area of interest to be targeted. Again, we can see here very possibly an area of interest here as well, just above the demand that we'd already formed. It is an inducement move here. So again, this may not form a massive move, may just be a short-term move to then take out early buyers out of this zone. So again, we need to be wary of that. But again, it is an area of interest. We want to see how the market reacts off that. And it's very easy to obviously pick up a few quick pips on a scalp out of these lower time frame zones and areas of interest that form larger moves and do break structure to the upside. So we can see here it's quite a strong move. The market moved aggressively above an area of structural resistance beforehand. It's taken at equal highs here. That's a liquidity grab move. And then we can see that it's kind of come in, filled the imbalance on this side, respected it, and then it's now pulled back out of this area. So we may well see a continuation up into this zone. We'll probably see a lot of consolidation in and around here, mirroring what we see on this side. which is again characteristic of the market. It needs to fill orders the same way on the way up as it did on the way down. Excuse me. So again, our projection stands. We're going to see how the market comes, tests these zones of interest below us for demand to then go bullish into this area again. Look for a consolidation within this and then see whether we're going to be targeting areas of equal highs above. And there are obviously areas further up as well, which we still have in terms of liquidity lying up above us at the moment for the market to continue bullish. Projection for the week is that. Again, I will post this now online on YouTube, Instagram, and whatnot. And if you guys want to start engaging from next week, then happy to hear from you. My phone has actually been off throughout Christmas, which is why I haven't responded to a lot of messages. But I've now got it up and running this week, and hopefully I'll get through all the messages and DM requests and all that in due course, and get back to people that have been obviously reaching out. Thank you. Speak soon, guys. Trade safe. Bye.